following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour. As you know, this is the 11 o'clock to 12 o'clock time slot. Great program as always. And of course, today being Wednesday, Daryl will be coming in straight after my show. Just great programming. What can I say? We try to give you as much information about the markets as we possibly can based on our experiences, and hopefully it is beneficial. So here we go. Dow's down 28 to 17,860. S&P's down 4.5 at 2,097. This is going to be very interesting. Comp index is up 10 at 5166. The gold is down 8 at 1055. Now, yesterday was just an amazing session. Gold was just, for a few days now, gold has just been going nowhere. And then today it went down further, even on Friday. And Friday gapped down sharply. But gold, if anyone had bought gold stocks the last couple of days, I mean, we for my subscribers, we bought something at the exact low yesterday, and it was up. I think it was, now I can't remember. Did I write that down? I think I wrote it down. Let me just check. Give me a second. In my newsletter, I should have said. Yes, 13% in one day. Giving back a little bit today. I think it's really necessary. I'd like it to give back a little because I want you to be building a stair-step move to the upside. But these gold stocks, something's going on. There's an anticipation. And it's an anticipation, I think. You know, we keep talking about the Fed and that quarter point and all that. I think the Fed would very much like the dollar to come down. I'd said that a long time ago, and then the dollar took a breather. Now it's back within pennies. Well, actually, I shouldn't say it until I look. The dollar, wait a minute. I think we've just done it. All right, one thing at a time. Let's just do the numbers. Gold's down 8, S&P, the silver's down 4 cents at 14.04. Platinum's down, high-grade copper back at the 2.07 level. Crude oil is back at 41. Bonds are pulling back a little bit after a spectacular day yesterday. It's at 155 and 30 seconds. Now, let me just show you this quickly because I want to move away from this. This is the 120-minute chart that I show my subscribers. And I said we made a peak deep, 2105, round number high. There's a good chance we could be pulling back. Then I quickly sent the 10-minute chart to say, and that was right here, to say that we've made an arch formation from a peak D, third peak D, since the low that was made yesterday at this time at 10 o'clock. And now what we're doing is just consolidating. It's really important. I like these breathers. I don't want things to go straight up or straight down. I like to have little stepping stones. Now, what's really important, I can go back to the E-minis to show you that this, get this out the way. Look how close we are in the weekly chart to breaking into leg C at 2110.50. The high so far has been in that 2105, did I say? Yeah, 2105 area. I mean, it's just a hop, skip, and a jump, and we're right there. Not even a hop, skip, it's just a skip. That's all that's left. No, it's just a jump. We've done all the hopping and the skipping. But this is leg C. I have, the way it's working and the way I try to plan it, next week I'm giving a talk at MIT. This is with the Boston Investors Group. I'll give more information about it maybe Monday or so to tell you exactly where it is. It'll be starting at about 7 o'clock. I'm the guest speaker. It's over at MIT. It's the Boston Investors Group. But that's just, that's really a preparatory to my Thursday webinar. And let me go to the front page of TFNN because I think I must do this right now. I don't want to keep forgetting about it because I get so involved with the stocks. Look at this. There is so much information on this front page. This is Elliott Wave 5. If I'm correct, and remember, this is my own analysis based, it's a conjunction of, it comprises the mix of the Chapman wave and the Elliott wave and Elliott wave 5. If anybody does any Elliott wave work, you know that 5 is the one that has the greatest move to the upside, or it's the one that culminates a move, or it's a really important one. And over the years, we've seen that we've had really mixed results with fives. Fives have flattened out and not gone on very much higher than they should. They've kind of just made nominal new highs and whatever it's you're looking at, and then they've had a zigzag sideways move. This is a very fascinating period, putting it together with what I'm looking at, all those icons that I've spoken about for years and years and years, about skyscrapers, the phenomenon, etc. Now, what's really important about this is that I want to show you something here. Besides my webinar coming up a week from Thursday, and I want to mention that, but I'm really mentioning it only as a subsidiary to what I think is really important. I know this is one of the few organizations that when I see someone standing outside and ringing the bell, etc., for the Salvation Army, I invariably do want to give. It's one of the few organizations I think that does the one-to-one grind work that foundations need to do. So on the front page, you'll see Salvation Army Tiger Dollar Holiday Sale. I know we've had it before, and it's been really successful. I know that Tigers are very generous people, and they really like to give. But what's really important is that if you purchase any amount of Tiger dollars during the Salvation Army holiday promotion, you receive $25 bonus, and up to 10% of your purchase will be donated. And this is really fantastic. I don't know how they can, all the time it takes. They donate 10% of your purchase, up to 10% of your purchase, to the Salvation Army in your name. You can get the tax deduction. I mean, it's a win-win for you. It's really a win-win-win. Let me look at the chart of win just now. All right. So I just wanted to show you that's the front page news. I'll be talking a little bit more about. I'm so fascinated with what's going on because this fits in. I needed a whole bunch of things to come into place by November. If it happened at the end of December, I would have had to have had a different perspective. I don't know if I've got the right perspective in the den. Someone says, Basil resembling Billy Crystal on Tiger TV. I thought you meant the crystal ball. I have no crystal ball, and I have no Billy Crystal. All I can do is the best I can in terms of the Chapman wave, and I look at trends. I look at trends very seriously. Never written a book or anything on trends, but I've written lots of papers, and I've written a lot on what I'm looking at in terms of trends. And it doesn't matter whether it is dress, where the dresses are becoming, I spoke about this 5 years ago. I said, watch that whole thing with back in the 50s with the petticoats, with the dresses coming out like spinning tops. And we're starting to see that. Spoke about young people, the very young people starting to dress. You go to a mall now, and you remember you used to look at the children's section, and you say, children's section, Hey, children's section now, they have jackets, ties, I'm talking about the little 6, 7, 8, 9-year-olds. I think we're going to a fascinating period, the period that goes very, very well with other periods that I've marked as important icon phases that are telling you a story. Remember, it was about 6 or 7, for those of you who've been listening for a long time. I said, even though on television you'll start to get swearing and all the garbage put into all the shows. They even did that on The Big Bang the other day. I mean, they just kept it as clean as possible, and they couldn't resist, because that's exactly what happens in television. It is like politicians. They are the last. They're the ones that sit in the caboose, see which way the wind is blowing. When the train hits the station, they jump out like I always think of Bill Clinton, who was absolutely perfect. They jump out and they say, the wind is going that way. And that's exactly what happens with both politicians and TV. What happens is they get belatedly, they start adding all these things to the show. By the time the shows are really in fruition, the phase is pretty much gone. And I think we're going into a clean phase. I mean, I don't know how to explain it, a Victorian phase. And I'm going to talk a lot more about it over the coming weeks. I'm also going to be talking about politics, not politics to tell you who to vote for. I couldn't care less. but I'm going to talk about the politics of politics. Why? Because within the context of what we're looking at here, the Fed is manipulating within the politics of politics. They don't want to make a mistake. It's going to be politically too big a deal for them to start raising rates, even with everything they've said, if within 2 months' time, they're going to have to say, oops, we're taking it back. I would not be surprised if they are forced to say, we will definitely do it in January or something like that. Or between now and then, there's a report that it just knocks them for a loop. Okay, enough with that. So now let's do the couple of things that I wanted to actually do. You see, this is leg C in the E-mini. Let me go to the SPY, and you'll see that this is leg B. And if I go to the Dow Diamonds, we haven't yet made B. So that's the SPY. Here's the diamonds, the Dow Diamonds, the trading vehicle for the Dow, right here, DIA. And today we went above, we went to 174 on the diamonds, that is, above the 178.97. Today's high is 179.04. And there it is. So we've started leg B, gray B. Why is it called a gray B? Because it is underneath the previous peak G. And as long as you're underneath, you can fail at any point. It doesn't mean to say you're going to fail. It just says be careful. That's different to a Chapman wave buy mode. For instance, I've got an up arrow, putting it in right now, an up arrow in the weekly chart. And that up arrow suggests that there should be higher peaks to a peak D in the weekly chart, because the MACD is at 90%. So the MACD is very strong, the stochastics at 90%. And as long as that happens, it suggests that the upward bias should be maintained. But we're looking at a pattern here in the monthly that is going to be very important, because I'll be putting it together with the Chapman wave notations, and I'll be putting it together with the possibility that if this is Elliott wave 5, and there's nothing to say right now, as far as I'm reading it, to say that it isn't the potential for a 5, you do need a new all-time high. But everything going from the low of 50,370 in the Dow, this is spectacular. Now, it's interesting because the Dow itself has not, the diamonds made leg D. The Dow has failed to make the D, and it's going sideways. So this is going to be very important, because there's a chance that we might fail. There's a chance that we might break out and spiral to the upside. And there's a chance that you can go sideways a little longer with just nominal new highs. And I'm going to discuss all of that next week. So in the meantime, back at the ranch, we've got a break coming up. The Dow's down 28. Let me see the 10-minute chart here. Yep, holding that support. Let's see what happens. And I'll be right back. Basil Chapman, 877-927-6648. Love to take your calls. Be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So just a couple of things here. Will yesterday was not Will from Shreveport. It was Will from the Clearwater area. And thank you, Tampa Clearwater area. Thank you, Will. Great question on the SMHs. Spiked up again today, up at 56.64. Leg B with a possible doji. And I would have said, wow, this could be that double top. But you know what? Leg D in the 120-minute chart, it could pull back again. We've got a lot of support in the 56.10 area. It's at 56.64, the SMHs, but it's the stochastic and MACD that keep me on the long side of looking at the long side, that is. And leg C in the weekly, I still think it's going higher. So I just wanted to clarify that. Now, I had something at the middle of last week. It was suggested to me, I look at certain scan. It was sent to me. Some really great work was done. And I'm just going to run through a couple of things, and I'm going to show you what one of the problems is. This doesn't do the Chapman wave notation, but it uses a number of the Chapman wave techniques that I talk about here. So this was Wednesday. It was probably around about Tuesday of last week. Tuesday, what was Wednesday? Thanksgiving was Thursday, right? So, okay, right there. So this is where the scan was, and this came up, ABTL, which is Auto by Tel. And was trading, let's say, in the 23.5, 24 area. And the MACD was very strong. The stochastic was very strong. Now what's happened is it's spiked, and it's gone to 25 and today's high. Oh, it hasn't made a D yet. It's in C, and it should make a D. So in the daily chart, nice work. It's a good scan. But what do you do when you're already this high? Well, there are a couple of things that you have to look at. The one is the 9-period moving average. The other is the stochastic going to remain there after D, or is it going to drop from 94% into the 87%? Still good, but it allows you some leeway to the downside. Then you look at the weekly chart and it says, hey, wait a minute. It's the same thing in 25 was a round number high, last round number high. It could go to 2501 for leg D, but once you get to D, you've got to be a little careful. So in this particular instance, it's meeting certain criteria, and it's good. And it's really good to have a look. I've got other scans that do the same thing. They're looking at the stocks that are looking great, but they've already had a big move. And then what do you do? So let me go through some others here. ACRX, and that in fact is ACEL RX Pharmaceuticals Inc. trading at $4.99. Just that's the other thing in the scan. You want to be able to look at volume. You don't want these things too light volume because, yeah, it's okay for personal reasons, but certainly not for subscribers. I can do it occasionally, but you got to be careful. So in this particular instance, what we're looking at is it made a peak F top. So it was right there. It was about to make, I remember looking at this and was about to confirm a peak F top. Why did I call it an F? Because the MACD fast-moving average just kept going higher and higher and higher before turning down. So that said, it's probably not anything like an instant restart type thing. So in the meantime, back at the ranch, it's had a sharp pullback today, down 7% at minus 0.41. But it's the weekly chart that says, hey, this is something to keep on your scanning list as a possibility, but I don't see anything yet. Let me move this $120-minute chart away just for the moment, and you'll see that the it's really in a downtrend with lower highs and lower lows. So I've been looking at this, and my suggestion was that this is really a good product to be looking at. But a lot of work has to be done afterwards. So as a scan, look, here's AdTran, which hadn't made its leg D, and I was expecting it to go to D. It was almost one that I chose. But then I looked at it and I said, you know what? It's here again, it's kind of light volume. And a lot of people do not like to buy light volumes. I don't mind, but they don't like to buy light volumes. So, I mean, we have one that is just an experimental thing that we got just for a few cents, and it is it has no volume. Sometimes it doesn't even trade, but it's got a story behind it that I think when that's recognized, I think it could start to move a little higher. And the reason why I like it is that, in this case with AdTran, I like it. I actually do like it because I remember the MACD and stochastic were moving very well. It's an old stock meaning I remember it from way back. Look, this is A, B, C, D. A, B, C, second D, and then it comes down very sharply, and that was a B minus failure. But it has been hit very badly. So now let me show you. So as a scan, what it's doing is it's giving some stocks that you say, oh, I wish I'd got it earlier. I'm trying to find scans that say it's here. This is where you want to start the position. I have a couple, and I use my own techniques. But as a scan, here's another one, AFH. This is Atlas Financial Holdings. Nice chart. Went to, I'm not sure whether this is an E or a C at this particular point. I'm inclined to think of it as a C. I like the weekly. So this is one that, so as a scan, as looking at stocks that have done well and that are holding very nicely, I think this kind of fits a number of criteria. So, and then I'll look at AMAT, which was also on the list, and we'll do that when we get back because that's part of the SMHs. I'll be right back. Basil Chapman, Dow's down 36. We're biding our time today, waiting for the Fed for something, I don't know. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. So we were looking at this, was presented to me as something that had been worked on, and what was I thinking about it? I think it offers a lot, but there are other ways of doing the same sort of thing and getting not the same results, but results that are similar. And this one offers the opportunity of looking at dailies that then goes to the weekly. And when you look at the weekly, if it meets the criteria of the Chapman wave, then now you've got to look for placement. It's all very well looking and say, wow, that's great. Applied materials up 3 cents at 1922. Look at this cup, this huge bowl formation, and it did it perfectly. It went to the, where did it go? Oh, it isn't perfect yet because we've still got, this is a daily. So the level that I'm looking at for today is the last day on this particular left side, right side move is 1963, and we're at 1922, 44 cents to go. That's a lot. But if you use it based on this criteria right here, all of a sudden, you're looking at, let me just do this correctly. I don't want to rush. Yes. So in this particular instance, what we're looking at is left side goes to May, right side goes to the low of the 24th of September at 14.29, and the right side goes all the way to, oh, I don't have enough. goes to mid-December, mid to about the third week of December at the 20.46 level. I don't think it's going to take 2-3 weeks to get there. If it's going to get there at all, it has to get there as leg B goes to C and D, should be a lot sooner than that. And then you've got your resistance line right here that you're looking at, Chapman wave inside wedge resistance line. So I do like it. Yeah, as a scan, I think it's offers a great potential. And I thought I'd just show it live here on the show because this way I can get through a bunch of things at the same time. And what it does is goes from the daily to the weekly. The monthly is still, the other things that need to be done. But so far, I think, yes, it really does work. But it is based more on the technical criteria, not necessarily the waveform. So that's what I'd have to use for the Chapman wave as well. So now let's do this. I had a question that I needed to go to. Where was it and what was it? Just slipped my mind. I was about to do it. I said, I'll just go. That's right. Someone said, hey, what about that stuff that you use that looks a little like John Logan's? Well, don't forget, John Logan he's got a whole team working. He's got an incredible software program. It does things in all time frames in many different, with using different criteria. This one here is very simple. And this is one I've used for years, and I don't use it for a while, then I do use it. I only use it to really check on things. For instance, now I'm saying, look, the SPY had tremendous resistance at 212 right there. That was way back on the November the 3rd, and it hit 211.66, and then it went where to? 204.72 was the support low, and it went all the way down to 202.12. It went 2 points low, 2.5 points low. Then it comes running back, and it goes to 212.04 as resistance. It actually went to 210.12 when that flashed. And then it gives you 206.21 as support. And where did the market pull back to 207.41 on the SPY? Now I've got three, 212.52, 212.04, and 212.18 as very strong resistance levels. For the SPY, it needs to pierce it decisively, because if it cannot do that, this is going to be a very strong resistance area. What is the SPY hit today? 211. And 211 is pulling back. So I'm expecting that this area right now is going to give us a lot of resistance. Here's the 10-minute chart. 10-minute chart says I have no, once you broke the 210.52 level, there are no resistance levels on the 10-minute chart, but now we're coming back, and the 210.17 area is going to be very important support to hold. And in the 120-minute chart, that goes all the way to 209.63, 209.09, 208.28. And 210.76 was the resistance, and it stopped at 211. So what we're looking at here is a different way of looking at it. Everybody has the different techniques. This is one that was compiled for me on my own criteria, I don't know, maybe 8 years ago, 7-8 years ago. But I don't really do it all that often, because I do find I've got my own levels at work that I seem to be able to see. Every day I give that in my opening call. This is show you right here. This is what if you do sign up for my webinar and you start getting my work, this is what you'll be getting. Every day, did I just take? No, I didn't. Good. Every day you'll get this. Right, the very first thing I do, 6:30, 7 o'clock, whatever it is. As soon as it's done, I'm sending it out. And that shows you exactly what's going on here. This is the Dow. These are the levels, what we're looking for, why we're looking for leg B above 17,915. I don't like 14. That is, I don't like when it takes too long. It's usurping energy. I talk about the MACD, the stochastic, and I'll give you parameters to look at, and I add a little bit at the bottom here. So that's one. Then I go to the next thing you'll probably get is I took it off. Sorry. But it's my overview. And my overview is, let me just get out of this here right now. My overview is basically this chart right here with 5 quadrants, I call them, the 5 quintiles. You've got the 120-minute chart shows a rectangle formation can last a lot longer than your patience. Remember that. It's probably one of the best, what do you call those things? There's a word for it. It's a hokey expression that you make up. Someone will think of the word. There's a beautiful it comes under a category here, aphorism, something like that. And look what happened. We went to peak C1, peak C2. We still, since the 20th of November, we still haven't broken the parameters on the upside or the downside. Aphorism, yep, correct. And so that can last a lot longer than your patience. And eventually when it breaks, it might just pop to the upside, but it sometimes has to come back and do a retest and maybe even go to the downside. This is a very important period. The volatility index, 120-minute chart, is at 1463. It's very low, but not that low. We've been down to the 11s, so there's room to go. I don't think we're going to get there. I think we're going to have a big spike to the upside before we get to the very, very, very low numbers. And here's the Trin, Richard Arm's Trinetics. I use it as the Trin gauge, Chapman wave Trin gauge. And here's A. We haven't gotten to B in the daily chart of the Dow. And this is the S&P. It has gone to a B and suggests we will go to a C and a D. Well, it suggests we should, not that we will. That's and I write a whole thing on overview and market day, what I'm expecting, parameters to expect, what to look for. Like I said here, look, the volatility index is at 1527. I said under 14.50s market rallies, over 15 market stalls. So every day you've got an incredible amount of information right here. This is for the overview section. And then what I do is I go through my different charts right there. So no, that's not it. This is it. Right. Yeah. So we go through the different charts, and I for instance, I haven't shown this chart yet. I'll be talking about it. This is the one, if you can see it right. I'm not sure if you can see it. Right there. I'll be talking about that. That's weather. That's all about the weather and the cycles of the weather, going back thousands of years. I'm going to be talking about that in the webinar. Then I show you certain stocks. I show you the 120-minute E-mini, and then I also show the 20-minute. I showed, what is this chart? Oh, okay, this is the stock we bought yesterday. This is AUY, Yamana Gold. I said to buy it at 208, and we bought it at 208, which was the low of the day, and it spiked to 226. I mean, in one day, this is crazy. It has to give some back. I mean, this is, I don't know what's going on with the with these gold stocks. They're not all acting as well, but boy, this one certainly had a nice session. So even more important is, what do we do with it? Do I raise the stop? Do I add? So there are all those things. Every single day in my Trader's Corner, I discuss those things. Here's my Trader's Corner. I'm not going to show the whole thing. I'll just show it pop up here. Today it has 18 or 19 bullet points, or more. It has 20 bullet points. I can tell you right now. It has 16 bullet points. Is that right? Yeah. And these are different things. And the ones that are underlined are stocks that we've had or got stopped out or whatever it is. So it's a very comprehensive look at the markets every single day. And I discuss. Sometimes I show charts. Every day I give you, I talk about the GLD, I talk about the Dow Diamonds, I talk about the TLT, I give parameters and the SPY, whether or not we own them. It's very important. I talk about what to look for in the volatility index, etc. So in the meantime, back at the ranch, this is what you're going to get if you do sign up for my webinar. You automatically get my newsletter on a trial basis. I just thought I'd mention that. Why not? Okay, let's get back to our story. Enough with AMAT. Now, I wanted to show you within the context, ESZ15, within the context of this E-mini, which will be changing very soon. It'll go to the January, March contract. And but that's not what I want to show. What I'll show is what we've got here. And I'm going to go to the ES continuous contract, because I want to show, look at this. That black line has been the most beautiful arbitrator of a trend, because when it closed underneath it, that was a warning. But how many times has it closed underneath? It's only closed since, there's a monthly chart. since March of 2009, that was March the 6th was the day we went along the diamonds. I wish I'd still kept them. We did keep them for 18 months, but still. From March of 2009, only 1, 2, and barely did it close under the 9 EMA, that big, thick black line. That's 2, 3, 4. It's right on it there. 5, 6. 6 times in 6 years. So 6 times 12 months, 50 something, whatever it is. 6 times. So what we're looking at here is, what did I say it was? 6 years, 6 times 12, 72. So out of 72 months, we've got a handful of times that the S&P has closed under the 9 EMA. Now that it's done it with that doji candle, with that Chapman wave Roman candle, we have to see closes above it, and you have to have 2 out of 3 bars that have closed decisively above the Roman candle just to negate it completely, and it'll come back into focus much later on. So we haven't done that yet. The high on that month of August was 2097.75. And the highest we've been so far is 2097, is that what I said? Yeah, 2097. And so far, we haven't closed above it once. So this is going to be very interesting. All right? Thought I'd show that. I'd show that. Then what we're looking at is in the various sectors. We were looking at the sectors one by one. I anticipated that the IBB would be a sector that pulls back and makes a hat-trick top. I discussed the fact that we've got to watch the HGX very closely because the HGX, the Philadelphia Housing Sector Index, made its high back in the week of the 21st of August at 244.56 as a recovery high, and then pulled back very sharply, and it hasn't gone above that. And there's some good action from the most recent 2-3 weeks on the upside, but it is still something that needs to be monitored very closely. I'd spoken about the restaurant area, Panera, let's say, PNRA. Panera, which I think has made a hat-trick top of 208 round number high, and that was back in July. CMG, that's Chipotle. I think they have a real problem. I just don't see them going back to that level of 758.61. I wouldn't say ever again, but for a long time at this rate, I just don't see what's going to get it there. So now we've got the restaurant sector. Spoke about the RTH. RTH, here we go. This is the Market Vectors Retail ETF, almost at an all-time high, and that all-time high is 79.50. The very next bar gave a Chapman wave 2-bar reversal, 79.25, and it plunged. It plunged from the 79 area to the 66 low. That's 19. Let's say call that. So we've got ourselves 14 points. 14. So this is like almost a 20% correction, and now it's come back in a V-shaped pattern. In fact, it's producing a type of a V or an oval pattern. I'll talk about that if I remember when we get back. I better write it down because I was about to move on to other areas. So this retail sector is going to be really important. There was an island reversal, huge island reversal back to the upside. So I have to consider this could be a B. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, we're back. If you're looking, this is a 2-minute chart of the E-mini on the right, made a peak D and then a turnaround. This one made a peak D with the U-shaped double top. Remember yesterday we were talking about the Chapman drop bucket formation, the double top U formation? And went right there, fractional high, boom, comes down E, and it's all the way back down, trying to form some kind of a base here. I do think there's got to be some give back of yesterday's gain. I would say 50 Dow points, 60 Dow points, 55 would be appropriate of the extra that was added to the market just from fear of missing out yesterday. All right, so let's do this in the remaining time that I've got you. I want to run through a couple of other indices, a question about the XLE. Yeah, XLE, I think, is making that arch formation. It's looking very weak, and all I can say is that at 66.90 down $1.66, if the XLE, which is the S&P Select Energy Spider Fund, if it takes out this low right here of the 23rd, 66.41, if it closes below it, you can't just hit it and bounce back up. If it closes below it, there's a real good chance you got the inverted V-shaped pattern goes to an arch formation. That arch formation or lowercase h formation should retest the low that was made of 65.20 back on the November the 13th. So this is it for XLE to save the day. It absolutely needs to get very quickly into the 68.80 area so it can retest the high of 69.13 that was made on the 24th. So that's that. And then IYR was asked about. Still holding well in leg B, gray B, because it's under the previous high. But so far, MACD and stochastic say this should be a buy mode. You should, in fact, be going. I'm going to put an up arrow because I think that's what we're looking at here. So that's IYR at 75.87, down 27 cents. I think this is leg B, possibly peak B today. I think it should go to a C and a D. The double tops are going to be absolutely imperative. We're going to do a big study on the Chapman wave drop bucket formation because that's the kind of pattern that we might be looking at unless we can soar right through, break out with higher closes above the previous high. That's got to be. So in this case, it's 77.04, and IYR needs to go into leg C, not D, but C, at about 77.30. And then I say, hey, that's great. You can go even higher. Okay. So now what I wanted to do is the VIX index, VIX. So don't forget, folks, go to the front page of TFNN. A lot going on. You got the Tiger Dollars. You got the Tiger Dollars with the bonus of the Salvation Army. If you do my webinar Wednesday a week, you'll be able to get it free for a trial subscription, no payment whatsoever. And not only that, you'll get my daily call every single day. All the stuff I do. You go to the front page of TFNN. You log in. And then you go straight to the part that says Chapman charts, opening call. You start getting the charts. You just keep refreshing until 8:35. 8:35, my Traders Corner comes out, the last chart, and then that's it for the day. Okay, now let's do this. The VIX index is trying to find support. You know, it's still not overly oversold because it's in a middle area of the 15s. So VIX index by Friday, sudden spike into the 1680s, 1690s. That's going to say market comes down. But if it remains here, and especially if it goes a little low into the 1450s, that's going to be a big boost for the market. So the one thing that was great yesterday is the late day buying in the XLF. I like that very much. It hasn't made a leg C yet in the weekly chart above 24.97, but it's at 24.71, down 12 cents, having made a new recovery high of 24.89. That is just 8 cents from breaking out above the previous left side high. So we do have a bank stock in our. We got the craziest portfolio this time. We've got bank, we've got gold, we've got parts, but on the short side. We've got biotech on the short side. I mean, this is really. I've got the very small cap stock index on the long side. I mean, this is really the weirdest thing. But we will be back tomorrow regardless. And have a great day. And Exxon made that wave 5 to the downside. It's bouncing, Dennis. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,